What is going on, guys? Welcome back to another brand new video. Today we're going to talk about order blocks. But before we jump into the video, there will be a link in the description and in the first comment below, which will take you to Binance.com, which is one of the world's biggest crypto platforms. You can buy crypto, you can sell crypto, you can exchange, you can swap, you can transfer, you can do whatever you want. And if you use my link to sign up on Binance.com, you will get a 20% discount every time you have to pay a transaction fee. So please go ahead and take advantage of that. And also there will be a link to my Twitch channel. I stream video games almost every single night. So if you have a few extra couple of seconds or minutes, you are more than welcome to come chill with us, bro. And also there will be a link to my other YouTube channel where I upload gaming videos about once a year. So if it's not too much to ask, go ahead and drop a sub on that channel as well. Let's jump into the video. So before I show you what order blocks are and where you can find them on chart, let's discuss what are order blocks by definition. Okay, order blocks by definition are areas on the chart where the big institutions, the big banks, okay, the big money basically, does an accumulation of orders, where it's an area where the big money, the big banks, the big institutions, they collect orders before making a move. Okay, and so depending on the move, we are going to name the order blocks as well. And by that I mean if the order blocks are going to be called bullish order blocks or bearish order blocks. Now I'm going to show you where the order blocks are, okay, and then I am going to show you what type of order blocks should we trust. So the simplest way, the easiest way I can explain to you what order blocks are, the simplest, the easiest way you can understand them is that they are areas of support and resistance. Okay, whenever the market approaches, so first of all, the market is going to create an order block on the chart, and then in the future, when the market approaches or visits or tests that area of an order block, the market is going to reverse from there for a little bit. Depends what type of order block we are trading. Okay, and so that is why I call them the areas of support and resistance. Whenever the market will reach these areas, the market will reverse from there. So you can either call them points of support and resistance, or you can call them points of reversal. So as to where the order blocks are, they're all over the chart, all over the charts. Doesn't matter the charts of Forex currencies or crypto or commodities or metals or indices, everywhere. You can find order blocks everywhere across all instruments and all time frames. So whenever I'm analyzing the markets, I analyze my markets 99% of the times on the 1 hour time frame. And then I enter the market on a smaller time frame. Entering the market on a smaller time frame gives me that very accurate, the most accurate entry I can look for. And so sometimes I will look for these order blocks on the smaller time frames, but 99% of the times I look for these order blocks or mark these zones on the 1 hour time frame. Okay, so over here we have USD JPY. Also, before I show you an order block, let me tell you something. Nothing in this market and the Forex market, nothing in this Forex market happens by chance or is a coincidence. Okay, nothing. It's always pre-planned. The algorithm is designed. That's how the market moves. Okay, and so when you see a market reversing in the middle of nowhere, I want you to realize that it's not happening by chance or by coincidence. There is a reason behind that, and the reason most of the times is an order block. For example, when you see this whole structure right here, you see a point of reversal in between this right here, okay? And let me mark this right here. And so when you look at this point in the middle of nowhere, okay, why do you think it reversed from here? Why do you think it reversed from here? So if you mark this, the exact point where it reversed from, you can see to the left. Now, some people will call this a resistance, right? Because there's a little bit of resistance, and then boom, the market just broke through with so much pressure. Okay, and so if you look at this right here is an accumulation of orders. You can see the market is ranging. Ranging means the market is moving sideways. Okay, it's not going up, it's not going down, it's just moving sideways. So when the market is moving sideways, it is collecting orders. Okay, it's collecting orders. And then afterwards, when the market makes a big move, okay, based on that big move, you will decide in the future if this is an bearish, bullish order block or bearish order block. Let me drop down to the 15-minute time frame. When you look over here, okay, and you see that the market is just, and also let me tell you one more thing. Trading order blocks or marking order blocks without market structure is useless. So both these things go hand in hand. Okay, market structure is going to help you find the best or the highest probability of profitable order blocks. Okay, so if you are just blindly marking order blocks, there's so many on the charts. You will never know which one is going to be respected or which one the market is going to reverse from. Okay, but if you combine market structure with that, trust me, it will eliminate 99% of the fake 99% of the fake order blocks from the chart, and it will leave you with that 1 or 2% high probability setups, high probability order blocks. Okay, so let me go back to the 1 hour time frame. Just looking over here, let me also delete this one. Okay, so let me show you something. We are in an uptrend. Okay, the market grabbed liquidity from here, reversed, broke market structure. First of all, this was a very good smart money concept trade, but we're not going to talk about that. What we are talking about is that the market is continuously making higher lows, high highs, higher lows, higher highs, higher lows until this area. What happens over here? The market breaks the previous lows. Okay, so after the market breaks the previous low, does this not indicate that there is a shift in the market structure? There is a shift in the trend, and now there's a possibility that the market is going to continue lower, right? There is, right? That's what it's indicating. And so, because up until this point, the market was making higher highs and higher lows, higher highs and higher lows, higher highs, higher lows, right? Higher highs, higher lows. So over here, everything changed with this new low. Okay, with this new low, broke the previous lows, broke this support, okay, and formed a new low. And so this indicates that there is a shift in the market structure. But what happens next? So we have a very strong resistance here. We have a resistance here. We have all these previous highs, right? And to break this high after forming a new lower low, okay? So would you not agree that to form new highs, we will need a very big amount of money? Okay, a very large amount of money. So if we can agree on that to break all this previous market structure and create new market structure, we need the big money, okay, the big banks, the big institutions. So there will be a formation of order block. So what's going to happen is that you can see from here, the market starts going higher, okay? These previous highs, keep in mind, have not been broken yet. They are not been broken yet. So we are not in an uptrend yet. And so the market starts order blocks. Okay, the market starts forming order blocks. The market is ranging. You can see there's a collection of orders. And then what happens? Boom. This candle right here. Not only that candle, okay, this whole set of these 3 candles. First of all, this huge blue candle or green candle in your case, okay, this is an indication of what? Big money. Okay, now whenever we see an impulsive move like this, especially after an order block, especially after accumulation of orders, we know that this is where the big money is involved, and that is where we want to be involved. Okay, because in the future, when the market is going to retest or revisit this area, it is going to reverse for a little bit. That's where we are going to make our money. So again, we have this accumulation of orders, right? Market breaks through, creates new higher highs, right? We can agree on that new higher highs were created, and the previous highest highs are broken. Okay, so now that we have created a new market structure, we can agree that the market is still in an uptrend. Okay, so this, if the market after accumulation of orders breaks to the upside, to the north side, to the buying side, we will call this a bullish order block. This right here is where's an arrow? Okay, This right here is a bullish order block. Okay, so when the market is going to revisit this area in the future, and you can see not only this, the market continues with so much continued higher with so much buying pressure. Guys, come on, this is obvious as daylight. Okay, we know for sure that this is where the big money is involved, because it keeps creating higher highs, higher lows, higher highs, higher lows. So when the market is going to revisit this area in the future, I will be looking for what? I will be looking for a sell or a buy. If you have understood the concept of order blocks, you should be able to answer this question before I answer it. So this is a bullish order block. The market is continuing higher. So if the market is, and what did I say? Order blocks are points of reversals. So when the market is going to revisit this area in the future, what am I going to be looking for? Am I going to be looking for buys or sells? Points of reversal. Okay, so when the market is going to revisit this area in the future, right now it's going higher, right? So it must be falling down, right, to revisit this area. And if an order block is a point of reversal, what does that mean? The market is going to reverse from here in the future. So I will be looking for what? I will be looking for buys. Now there's two ways to actually, how am I going to enter based on this? Okay, and let me tell you something. Whenever there's an area like this where there's so many red and blue candles, so an order block is a combination of both candles. Okay, green, bearish, and bullish and bearish. Both the candles are going to create an order block, because like I said, it's an accumulation of orders. So there's going to be buying orders, there's going to be sell orders. So whenever there's so many candles right like this right next to each other, I just take into, and you will be looking for, if it's a bullish order block, you will be looking for the last bearish candles. Okay, the last bearish candles before the bullish move. Okay, before the impulse. So you're going to be looking for the opposite of it. So if it's a bullish order block, you'll be looking for the last red candles. If it's a bearish order block, you'll be looking for the last green candles to mark. Okay, to mark the zone. But what am I going to do? Since this is a whole area, so I like to enter on either. Okay, so I'm going to draw it with the horizontal lines. So what I like to do is, if I am going to enter on a bullish order block, I will take into consideration the top of the order block and the 50%. So the top of the order block and the 50%. This is how I usually trade anyways. Institutional candles, ex-girlfriends, this is how I trade them. Okay, so even if it's an order block, the rules are the same. I look for the top of the order block or the open of the order block or the 50%. Both of these, I'll enter half my position here. If the market decides to fall a little bit lower, I'll enter, I will enter like this. Okay, and my stop loss will be just beneath the order block. Okay, and my take profit will be in the future, where close to a point of next point of liquidity, which is the closest point to liquidity or support and resistance, whatever you want to call it. So if I go into the future, right, what do you see over here? What do you see over here? So if I enter on the open, and the closest point of liquidity is right here, right? You see these two wicks right here. So this is a support, previously acting support, now becoming a resistance. So this is where my next take profit, or actually my take profit is going to be. Okay, so right beneath the order block and right here somewhere, just where the resistance is going to be. So about a 2-to-1 reward to risk, okay, ratio. So not bad, right? And this is an order block. This is an order block as well. Look at this. This is an order block, a combination of a, so most of the times when the market is moving very fast, either in a bullish manner or a bearish manner, sometimes it's not going to collect these orders. What it's going to do is it's only going to leave one candle of the opposite. So if it's a bullish trend, it's only going to leave a singular red candle in the middle, like over here. When the bullish pressure is just too much, it's always going to be a singular candle of the opposite color, or opposite trend in between, which is also a point of reversal. You can see the market reversed from here when it did visit it in the future. Unfortunately, not for, a lot of pips. 50 pips, still a good scalp in my opinion. And scalping is what is it's just my go-to. Okay, I scalp the market, I leave the market. Anyways, so also over here, this order block was also respected. But since it's a couple of red candles, I will take into consideration all of them right here. And you can see the market reverse from the open of it for a little bit. This was quite a lot of pips, not a little bit. Damn, this was a really good trade. But when there's two order blocks like this, very close to each other, I will always go for the one either which is closest to the liquidity, which in this case there's only one low over here. So if there were a couple of equal lows, I would have gone for this one. So the closest to liquidity, or whenever there's order blocks like this, I just go for the one which has more accumulation of orders inside it. Okay, so in this case over here. And also after this came the first sign of the bullish pressure, which also broke the previous market structure. So I always trade the order block which not only shows a very impulsive move right after. Impulsive means very fast and very big in the whatever the breakout might be, bullish or bearish, okay, whatever the direction. So I always look for the order block or the accumulation of orders. In which area? In the area where after the accumulation of order comes a very big move, impulsive move. Not only that, after that comes the break of market structure. I said in the beginning, an order block without market structure is nothing. It's unworthy. You cannot trust it. You will probably lose your money. So I always trust the ones that break the market structure right after. Okay, let me also show you an example. This was an example for a buy. Let me show you an example for a sell. Okay, so right here, right, we see that the market is in a very clear uptrend, right? Higher highs, higher lows, higher highs, higher lows, until this market structure right here. What happens in this area is that we see that the market for the first time shifts. For the first time, the market has a shift in market structure. And how is that? Why do I say that? Because after this highest high, okay, for the first time we have a break in the market structure to the downside. Okay, for the first time we created lower lows and lower highs instead of creating higher highs and higher lows. Okay, so this is the first time the market, what is this? Did I create an alert? What is this? How do I remove it? Before all of this happened, right? Before the market changed its direction and started creating market structure to the downside instead of creating to the upside, okay? Where was the last time you saw an accumulation of orders? And after that accumulation of orders, you saw impulsive move in the opposite direction, impulsive move in any direction, which in this case will be to the downside because the market structure broke to the downside. So we know the big banks, the big money, the big institutions want to go to the downside, okay? Want the market to continue to the downside. So the first thing we need to identify is an order block, is an accumulation of orders, is a range of accumulation of orders. So where is the first thing? The first thing, that order block is right here. We see an accumulation of orders, okay? And after that accumulation of orders, we see the market breakout right here. This is the first time the market broke out. I mean over here as well. It broke out over here from for a little bit, but it came back. So I guess the true range of this is right here. Okay, this is the entire order block, this whole thing. So we can see that the market broke down to the downside. Okay, again came another accumulation of orders, right? The market broke down with a very impulsive move. So the market keeps breaking down and down and down and down, right? And so when we go into the future, okay, the very first thing is this order block right here. Is this order block right here. The first thing is the accumulation of orders. It's just moving sideways, not creating new market structure to the upside, not creating market structure to the downside until this point. It starts breaking to the downside, breaks all the previous lows, right? Comes to the downside, breaks all the previous lows right here as well. So we know that this is the big money, right? We need a lot of big money to break any market structure, whether to the downside or upside. So when the market comes to the downside, we are going to mark. Now this is a very big range. First of all, let me remind you that, okay, this is about a 40 pip range. So if this is a big range, what am I going to do? I'm going to try to minimize this area. Okay, I'm going to try and look for the last, what did I say? Okay, first of all, let me label this as a bearish order block. So in a bullish order block, we'll look for the last selling candles. So for a bullish order block, what do we look for in the range? We look for the last, what did I say? What kind of color, what kind of candles do we look for? In a bullish, we will look for the last sell candles, the opposite. Remember, we'll always do the opposite. And then in a bearish order block, we will always look for the last bullish candles, which in this case is right here. Okay, right here is the start of the last bullish candles, and boom, that's where it breaks. And we also have the last, of course, another order block right here in the middle. Okay, but we don't care about that one because it's still in the middle, inside the range. So when we look at this, what does happen? What happens over here? The whole area, trading area, becomes smaller, right? So this means if you enter in the future for a sell, okay, your stop loss also becomes smaller. So if I was trading this whole range, my entry was at the open, my stop loss was going to be bigger, right? But now it's smaller because I have minimized my stop loss by recognizing, by labeling the last push to the upside before the downside, the move to the downside. Okay, and my take profit in the future will be the nearest point of liquidity. So if I go into the future, right, if I go into the future, this order block was respected as well. You can see always that right here, right, this last bullish candle and the red candle right next to it. So actually it was not, it missed by 1 pip or something. So you can see that this one also was respected. Okay, but I want to look for further break of market structure, so I know that the trend has in fact changed. Okay, the thing with these order blocks is that I still don't know what's going to happen in the future. Okay, the market might reverse from here, actually. Okay, instead of going down. So I wait for further break of market structure, and then I always trade the first order block, not the second one. So if we go into the future, you can see what happens, right? We place a short position right here, our stop loss just above the highest high over here, and my next point of liquidity is right here, this support right here. Almost 3-to-1 reward to risk ratio. Not bad, right? So this is basically it, guys. I mean, any combination of two opposite candles is an order block. Okay, this red and blue candle, which is a bearish and a bullish candle, is an order block. Anything of two opposite, any candles of two opposite type are order blocks. But I like to trade the order blocks which break market structure. Okay, you can call them a breaker order block. Okay, I like to trade breaking order blocks. Those are high probability order blocks, or accumulation of order zones. Okay, whatever you want to call it. Before I close the video, I want to show you guys something. Okay, so over here on Euro USD on the 1 hour time frame, what we can see is that the market is creating a lot of liquidity to the buy side. A lot of liquidity to the buy side. Okay, wow, I cannot even draw a straight line, bro. A lot of liquidity to the buy side. Okay, a lot of highs. So and you can see that I've marked an area right above here. What is that? If we zoom in onto that area, it's an order block. You can see that in between of all of this chaos, there's one bearish bullish candle. So what I'm guessing is that the market will create liquidity and reverse from here. And it will take all these highs, come into that order block and reverse to the downside. When it comes and visits this order block is when I will trade to the upside. Like I said, point of reversals, right? Whenever there's a wick like this, a huge wick, it's also an order block. If it's combined with a candle of the opposite color with it, that's a stronger order block. If it's a simple candle, single candle wick, it's not that strong, but this is also an order block. Okay, so I'm targeting that order block, and I'm guessing that the market will come up into that area, grab all these highs, and then reverse from here to the downside, which will also be a very good position since it's only 7 pip stop loss with a very good potential 300 pip take profit, which is a 40-to-1 risk reward to risk ratio, which is insane. We'll see what happens. So anyways, order blocks, it was a topic that was long due. Okay, I've been waiting since such a long time to talk about this, but here we are. This is a video on order blocks. I hope you guys understood. I hope you guys learned something new. If you did, please drop a comment below. If you have any questions, let me know. And that's it. I'll see you guys in the next video. Peace.